Hi guys, and it's been a while. I think like 2 weeks now. So today we're going to be doing a follow-up on my last weekly forecast, which was I think the last week of September. So this is a follow-up discussion, or rather illustration, on how dollar index has reacted to my last forecast. So if you remember correctly, if you didn't watch the last forecast which I did, that was the one for end of September, I literally highlighted that we are going to see price either trading to the 94 level and bouncing up, which did not happen because we closed below the 94 level here, but we did trade all the way to our 50% mean threshold of the daily order block. So now we have seen price finding support, or the buyers coming back into the into the market. There's a bit of strength on dollar index at this moment in time. So we have seen the past 3 days our bullish order block price managed to hold. So why did that happen, or what caused the buyers to come back into the market in this block here? So there's a couple of things involved, right? Number one, the Eurozone, the rising number of COVID patients, of the infections. Number two, clearly the positive news coming out between the Democrats and the Republicans regarding the stimulus. But take note, we're probably not gonna have any relief package before the elections. It will probably be after the elections, unless if something drastic happens, because the two sides seem not to be agreeing on what package to bring out. Number three, I mean, we have seen a bit of calm on the trade wars, the banning of tech companies, the banning of apps and all that, because the leaders of the free nation, the free country, they are now focusing on the elections. That's why we are seeing dollar finding support around the 93.20 level, and it's not a coincidence that it's in our higher time frame bullish order block. Even if you are to look at it from a monthly point of view, let me just go to a monthly, we can see this is our last down candle, right? So this was our August candle. Remember what I said, we are going to be seeing either a low on dollar index either in August or in September. So currently September has our low, right? And we might not see price coming back down there, but due to the elections, anything is possible. But I wouldn't expect price to trade lower. So you can see we had our last down candle here, and then September we rallied all the way to close to like 50% of this liquidity void here. Of course, we still have our fair value gap up here, which hasn't been filled. I still have my my levels marked properly. Remember, you need to have these levels on your charts so that when you open the chart, you know what you're looking at. So for now, you can clearly see we've got a bit of a recovery on dollar index. It's not much, but in terms of trading opportunities, it's a whole lot of trades that you can come to with just this small analysis that you do on dollar index. So as of now, 94 price point on dollar index is the one that's holding up price. The moment we close above, then we could see the buy stops above 94.78 being cleared, or even having the 95.90 being tested. So we can clearly see that there's a bit of strength coming back into the dollar. So coming back to our daily time frame, you can clearly see we have had bullish momentum since Tuesday, Wednesday, and today's candle also, which is Thursday. We've had a strong upward movement with price rejecting our 93.20 level, which is coming in on our higher time frame bullish order block. So you'd have been hunting for long entries. The guys in the mentorship, you know already, this was highlighted to you I think 2-3 days ago when I mentioned that dollar index is trading in our higher time frame demand zone. So yeah, that's how you'd have traded using the dollar index. Of course, the opportunities that have arise from all this analysis is shorting opportunities on Euro USD, GBP USD, and presumably long entries on USD JPY. Let's take a quick look on USD JPY. Yes, there we go. You can see the yen has also bounced from the demand level, which was highlighted again even on my social media pages. You can see this chart was there and it offered great long opportunities in this week here. This weekly trading time, it offered great opportunities to go to the upside. So if you go on lower time frame, you can see there we go, price moving to the upside from a higher time frame demand zone. So those are the opportunities that would have arise. You can see long entries on USD CAD and possibly on USD CHF. We've got good long entry. I remember I did this with another student in the group. You can see how price is respecting the higher time frame demand zone. We have seen already a nice bounce to the upside, big institutional induced move here, creating a liquidity void, then price retracing back all the way, filling up the fair value gap that was created between this low and this low, and then we had a boom, long entry to the upside. So that's how you trade using the dollar index. As of now, dollar will probably go clear up the buy stops above 94, and if it closes above, then we could see further moves to all the way to 94.40. So this then highlights to you that for now you need to be focusing on short positions on cable, fiber, long entries on the yen, and long entries on USD CHF, USD CAD. No need to be hunting for otherwise, because dollar seems to be gaining a bit. Of course, on H4 we've got momentum dying down a bit. Probably that's because we are heading into the end of the week. So I hope you have understood perfectly what I'm trying to illustrate using the dollar index. So now for the guys in the mentorship group, I see there one guy posted British pound against the yen. So I'm just gonna highlight a few quick notes that you need to be on the lookout, or the levels that you need to look at when you're looking at British pound against the yen. So I'm on a monthly chart right now on the yen, and we can see price is bouncing between these two levels here, right? We've got price bouncing between these two levels. This is going to be like a rough guide. Obviously, you have to perfect your levels when you're doing your analysis on your own. So we've got price trading into this higher time frame range, right? But now, since we are looking at it from a monthly point of view, I would suggest that we look at the past 3 to 6 months. That means 1, 2, 3, 4, 5, 6, all the way to this down candle here. You see, this down candle, that's what we need to be focusing on. So let me just clear up there and get back to my monthly chart. So you can clearly see this is our last down candle, right? I'm just gonna highlight it quickly, and we've had price move in a strong bullish momentum for the month of so that's August, July and June. This down candle managed to push price up. The buyers that bought in this down candle here managed to push price higher, and then we had a rejection back into our last down candle, presumably, which is now our bullish order block, and we saw another rejection. Current month tested again the bullish order block, and then it's rejecting at this moment, but it's not much of a rejection. Thereby, you have to be in a position to already know what you're going to be hunting for here. You need to wait for price to reach down into this area here for you to be hunting for long entries. The reason why we had this rejection up here, right? The reason why we had that rejection is because of the sellers in this candle here. That's our last up candle, our bearish order block. You see, that's why price respected this level, and you can see we went nicely to the 50% mean threshold of the body of our bearish order block, and then we had a strong rejection to the downside, nearly 720 pips. So once you have highlighted your levels on a weekly chart, study the chart, look out for other criteria that you need to include in your analysis, right? Look for any other criteria, but for now I'm gonna go to a weekly time frame, right? Once I drop down on a weekly time frame, you can clearly see now why I was saying you need to wait for price to reach the gray shaded area. I'm not saying trade shorts from the current level to the gray shaded area, because it might not come back down there. What I'm saying is wait for price to come into this range, right? It's still 100 pips away from it. Once it reaches this range, then you need to be you need to be hunting for long entries. So you can clearly see on a weekly chart, we have had price creating a liquidity void up here. See this candle here, sell side liquidity was just being offered to the downside. So now if we mark, we've got this law, the law of our last up candle, right? We've got the law of our last up candle. Hold on for me there so that you can see what I'm trying to portray here. So the law of our last up candle and probably the current high, and we've got two equal highs. We've got a nice fair value gap here, right? We've got a nice fair value gap. You see, that's one criteria that we need to take note of, because from this you need to be anticipating price to fill up this gap which was created by the liquidity void, whereby the sell side of the market was just being offered. You can clearly see we had another liquidity void here. Eventually it was filled. So same applies. We should be anticipating for the same trade to pan out here. But if you're looking for long entries, wait for price to come down here, then you take it to the upside, targeting this old low of the last up candle here. So once you have done that, I've highlighted my weekly levels, right? What else do I need to be looking at? Already the most important thing that I need to highlight there, I've already marked it. I'm not gonna highlight this down candle here because it's already highlighted on my monthly chart, meaning I'll be anticipating long entries. You can see already our monthly bullish order block price came back 50% of it, of the gray shaded area. We had a bounce to the upside. Same applies here. Then we had a bounce to the upside. Now I'm gonna go on to a daily. Now on the daily, see those two equal highs I mentioned? We've got price trading lower. And remember, this is British pound against the yen. This thing moves when it wants to move. So you can see how the liquidity void looks like on a daily time frame. So for me, I'll only be looking to trade, if I'm gonna trade the British pound against the yen, I'll only be looking to trade it once it gets into my monthly bullish order block, right? Preferably in this down candle here on my daily time frame. If price trades lower to this candle, to this down candle here, right? So meaning I'm anticipating this type of price action. Of course, you can go long at the current market price, but it means your stop loss is gonna be huge. Your risk is you're gonna expose yourself to too much of a risk. Your stop loss has to be quite big. So now I'm gonna drop down to an H4. I'm sure you can now see how I am breaking down the structures. Now on H4 you can clearly see I've got buy stops below these two lows here. I've got a huge liquidity pool there of buy stops, sell stops I mean. Below here we've got a huge liquidity pool of sell stops, so I'm anticipating price to come into this range only once it reaches this demand zone here, right? Then I'll be looking to be a buyer with stop loss below this price point. So I hope that that has given you other ideas on your analysis. For those guys in the mentorship, I've seen the charts that you are sending in the group. Unfortunately, at the moment, I'm not that much on the charts due to the predicament which happened in the family. You all know about it, but I've just tried my best so that you guys have got something to watch and to digest on your free time. And I hope this has been insightful to you, and I wish you guys good luck and happy trading. Thank you.